In my first video on preparing a Schedule C, we took a look at what is considered to be income for a sole proprietorship and how that income is reported on the Schedule C. Now it's time to look at the expenses that reduce your gross income to net taxable income. I'm the Tax Geek, and here's reporting business expenses on a Schedule C, oversimplified. Now, I've made a lot of videos on specific types of business expenses, including videos on depreciation, vehicle expenses, travel expenses, and claiming a home office deduction. Now it's time to take these expenses together along with all the other allowable deductible expenses a business can have and report them on a Schedule C. But first of all, what makes a business expense deductible? To be able to deduct an expense from business income, an expense must be both ordinary and necessary. To be ordinary, an expense must be a customary expense for the type of business. This is where that business classification we entered in the header of the Schedule C comes into play. For example, deducting the cost of gasoline and oil for small equipment is ordinary for a landscaping or logging business, but isn't ordinary for an accounting firm. I could go on with a number of examples, but you get the idea. However, there are many types of expenses that apply to just about every business. These include advertising and promotion, wages and payroll taxes, professional services such as legal or accounting services, insurance, depreciation, rent, and office expenses. A business expense also has to be necessary. A necessary expense is an expense that is required for the business to operate or operate more efficiently or profitably. An expensive, luxurious vehicle may be considered ordinary, but not necessary, but a less expensive vehicle meets both tests. That's why more expensive vehicles are subject to vehicle depreciation limits. A training seminar in a distant city might be an ordinary expense for a business, but it's not a necessary expense if a similar seminar can be attended locally. Business meals must not be lavish or extravagant, which again depends on the situation. In general, unless the situation is particularly egregious, the IRS will let businesses decide for themselves whether expenses are ordinary and necessary. And if the business engages an accountant or tax professional, these people will usually make sure that expenses meet both these tests. It's now time to look at expenditures that businesses routinely make that are not deductible as business expenses on a Schedule C. Some of these expenses are not deductible at all, and others are deductible, just not on the Schedule C. First, withdrawals of cash by the owner for living expenses, or directly using business funds to pay personal expenses. This also includes the cost of any merchandise taken for personal use. All entertainment expenses, where the business owner pays to entertain current or potential customers, were made not deductible by the Tax Cuts and Jobs Act of 2017, which was extended permanently by the Tax Cuts for Working Families Act, formerly known as the One Big Beautiful Bill Act, in 2025. Federal income taxes paid by the business, although federal payroll taxes and all state and local taxes are fully deductible. Health insurance for the business owner is not deductible on Schedule C, but it may be taken with some restrictions as an adjustment to income on Schedule 1. The cost of health insurance provided by the business to employees is fully deductible. Retirement contributions for the business owner are also not deductible on Schedule C, including IRA, SEP, and simple contributions. They are also taken as an adjustment to income on Schedule 1. And again, contributions to these plans on behalf of employees are fully deductible on Schedule C. Charitable contributions made with business funds are not deductible on Schedule C, but if the owner is otherwise able to itemize deductions on Schedule A, they may be claimed there. Beginning in 2026, a limited amount of charitable contributions may be deducted, even if not itemizing. And finally, fines and penalties of any kind are not deductible on Schedule C or anywhere else, as well as payments that violate the law, such as bribes or kickbacks. That being said, it's now time to look at Part 2 of Schedule C and take a closer look at some of these expenses, many of which have one or more videos relating to that expense. A playlist of all the videos referenced can be found on the end screen. I have made a number of videos on deducting car and truck expenses. You can use either the standard mileage rate or the actual costs associated with the vehicle, proportioned between business and personal use. If you use just one vehicle for business and are claiming the standard mileage rate, you provide information on vehicle mileage in Part 4 of the schedule. Part 4 will be discussed in the next and final video in this series. If you're claiming actual vehicle expenses, vehicle depreciation is entered on line 13, insurance on line 15, loan interest, not the entire loan payment, goes on line 16B, and if the vehicle is leased, the payments are entered on line 20B. All other vehicle expenses such as fuel, repairs, tolls, and parking are totaled and placed on line 9. All insurance expenses other than health insurance is entered on line 15. The cost of health insurance you provide for employees is entered on line 14, and health insurance for yourself is taken as an adjustment to income on Schedule 1, if you qualify. Only 50% of most expenses for business-related meals is deductible. However, if your occupation is covered under the Department of Transportation Hours of Service limits, you may deduct 80% of your expenses. If you pay wages, those wages plus any associated payroll processing costs are deducted on line 26. Associated taxes, such as the employer portion of Social Security and Medicare taxes, are deducted on line 23. And most businesses have expenses that cannot be put into one of the categories listed in Part 2. These expenses can be listed in Part 5 on page 2 of the Schedule C as Other Expenses. Every business is different and has different categories of expenses. The important thing is that for you as a business owner can understand and make sense of these expenses. All of the figures on a Schedule C should be rooted in sound records and be backed up by receipts. If a business owner is guessing at or estimating expenses, this can often result in a higher net taxable income because of a tendency to lowball their expenses just to be on the safe side. Once all expenses from Parts 2 and 5 have been totaled, they are entered on line 28 of the schedule. These expenses do not include business use of the home, which we'll look at in the final video in this series. The expenses are then subtracted from the gross profit from line 7 of the schedule. If these expenses are less than the gross profit, you have a tentative net profit. If the expenses are more, you have a tentative loss. And that's where this video ends. In the next video, we'll look at the 3 remaining sections of the Schedule C: expenses for business use of the home, cost of goods sold, and vehicle information. Please subscribe to the channel to get access to this upcoming video as well as other videos on this channel. If you found this video informative, please give it a like and share it with anyone else who could find it useful. Links to additional resources and information can be found in the video description. And of course, your questions, comments, and suggestions are always welcome in the comment space below. Thanks for watching, and I'll be back soon with more of Your Taxes Oversimplified.